Hello everyone, welcome to the 223rd episode of me learning how to trade in Forex. In the last episode, we went through the best ways to learn technical analysis. So technical analysis also involves studying behavioral economics and risk management, as well as chart patterns and indicators. After learning about technical analysis, apply them in practice through backtesting or paper trading. Best trading systems employ a simple set of rules that perform profitably and are flexible enough to perform well in both the past and the future. When paper trading, carefully track performance of these trades to objectively determine how successful the strategies are over time and practice over a long time frame. Traditionally, and then we went through what is a candlestick pattern. So traditionally, candlesticks are best used on a daily basis as each candle captures a full day's worth of news, data and price action. So the candles might be more useful to long-term or swing traders, but of course short-term traders can use them as well. Each candle can be viewed as a contest between the buyers and the sellers. Green candle means the buyers have won the day, red candle means the sellers have won the day. As the Forex market is 24 hours, there are fewer price gaps in the candlestick charts. So Forex candles can only exhibit a gap over the weekend, where the Friday close is different from the Monday open. A little imagination is needed to spot Forex candlestick patterns, since they might not be the textbook definition in their formation. So that's what we got up to last time. Now we're going to carry on with examples of candlestick patterns. So let's get started then. So examples of candlestick patterns. The examples below include several candlestick patterns that perform exceptionally well as precursors of price direction and potential reversals. Each works within the context of surrounding price bars in predicting higher or lower prices. They are also time sensitive in two ways. They only work within the limitations of the chart being reviewed, whether intraday, daily, weekly or monthly. They only work within the limitations of the chart being reviewed. So they only work, I guess, within whatever the time frame your chart is at. So they only work weekly, or they only work for that month. Their potency decreases rapidly 3 to 5 bars after the pattern has been completed. Their potency decreases rapidly 3 to 5 bars after the pattern has been completed. As precursors of price direction. Each works within the So candlestick patterns which are precursors of price direction and potential reversals. Price direction and potential reversals. Each works within the context of surrounding price bars in predicting higher or lower prices. They're also time sensitive in two ways. So note these are time sensitive in that they only work within the limitations of the chart being reviewed. Within the limitations of the chart being reviewed, whether intraday, daily, weekly or monthly. Whether it's intraday, daily, weekly or monthly. Their potency decreases rapidly 3 to 5 bars after the pattern has been completed. Their potency decreases rapidly after 3 to 5 decreases rapidly 3 to 5 bars 3 to 5 bars after the pattern has been completed. Their potency decreases rapidly 3 to 5 bars after the pattern has been completed. Okay. So what does potency mean? So their effectiveness decreases rapidly 3 to 5 bars after the pattern has been completed. Yeah, I don't really understand what they mean by potency. Right, anyways, doji and spinning top. A doji, plural, is also doji, is a candlestick formation where the open and close are identical or nearly so. Spinning top is very similar to a doji but with a very small body, in which the open and close are nearly identical. Both patterns suggest indecision in the market as the buyers and sellers have effectively fought to a standstill. But these patterns are highly important as an alert that the indecision will eventually evaporate and a new price direction will be forthcoming. Here are some visual examples of doji and spinning tops. A technically perfect doji, the cross, so this one here, suggests the corrective rebound may be ending. A bearish, long-legged doji suggests yet another topping pattern. After several days of further indecision shown by spinning tops, the down move resumes. So I'm assuming this was in an upward move from here to here or something like that. But then due to the indecisions with the dojis and the spinning tops, it turns into a downtrend. So doji and spinning top, dojis and plural is called doji as well. So doji and spinning top. Forgot my good old bullish / bearish engulfing lines. An engulfing line is a strong indicator of a directional change. Bearish engulfing line is a reversal pattern after an uptrend. Wait a second, I just realised I haven't written anything for the doji. Both doji and spinning tops suggest indecision in the market, but these patterns are highly important as an alert that the indecision will eventually evaporate and a new price direction will be forthcoming. And that indecision will evaporate as a new price direction will be forthcoming. Bullish / bearish engulfing lines. An engulfing line is a strong indicator of a directional change. A bearish engulfing line is a reversal pattern after an uptrend. The key is that the second candle's body engulfs the prior day's body in the opposite direction. This suggests that in the case of an uptrend, the buyer has had a brief attempt of higher, but finished the day well below the close of the prior candle. This suggests that the uptrend is stalling and has begun to reverse lower. Also, note the prior 2 days candles, which showed a double top or tweezer tops, itself a reversal pattern. Bullish engulfing line is the corollary pattern, so the opposite to a bearish engulfing line, and it appears after a downtrend. Also, a double bottom or tweezer bottoms is a corollary formation that suggests the downtrend may be ending and set to reverse higher. golfing line is a strong indicator of a directional change. So, and golfing line is a strong indicator of a directional change. A bearish engulfing line is a reversal pattern after an uptrend. So a bearish engulfing line is a reversal pattern after an uptrend. Is a reversal pattern after an uptrend. The key is that the second candle's body engulfs the prior day's body in the opposite direction. The key is that the second candle's body engulfs the prior day's body in the opposite direction. So the second day's body engulfs the prior day's body in the opposite direction. The second day's candle body engulfs the prior day's body in the opposite direction. This suggests that in the case of an uptrend, the buyers had a brief attempt higher, but finished the day well below the close of the prior candle. So this suggests that in the case of an uptrend, so this is what we're talking about, right? After an this suggests that for an uptrend, the buyers had a brief attempt higher. The buyers had a brief attempt higher, but finished the day well below the close of the prior candle. Finished the day well below the close of the prior candle. This suggests that the uptrend is stalling and has begun to reverse lower. So this suggests the uptrend is stalling and has begun to reverse lower. Also note the prior 2 days candles, which showed a double top or tweezer tops, a self-reversal pattern. So I'm assuming they're all talking about this diagram here. So double top, tweezer top signals potential major highs, so these two ones here. Bearish engulfing line confirms double top and signals a downside reversal. Second candle's body engulfs the prior day's body in the opposite direction, so opposite direction because this one's green, this one's red, and this red's body eats the green one because it's larger up there, both sides, both the open and closes. Confirms double top and signals a downtrend. So we can see that why imagination is needed, because this isn't exactly the textbook definition of a tweezer top, these two green ones. So bearish engulfing line confirms double top and signals a downward reversal, so it goes down. And then bullish engulfing line is the opposite, so where the green eats the red one. Bullish engulfing line suggests the down mover is reversing, so green eats the red, and then it looks like, but then this one, it would eat this one as well, so this is the bearish engulfing line, which could signal the trend is about to go down. Right? but don't know how long that's going to take though, because it looks like this one's going up though. So yeah, so this one's open, close, but this pattern could be the three white soldiers. Here we go. Formed by 3 long bullish candles. Long, well, they're not exactly long. First candle's reverse candle either ends the downtrend or implies the period of consolidation that follows. Second candlestick should be bigger than the first candlestick's body. It should also come near its high, leaving a small or non-existent upper wick. I wouldn't say small or non-existent. Third candlestick should be at least the same size as the second candle and have small or no upper shadow. Nah. A bullish engulfing line is a reversal pattern after a downtrend. The second day's candle body engulfs the prior day's body in the opposite direction. This suggests that for a downtrend, the sellers had a brief attempt lower, but finished the day well above the open of the prior candle. This suggests the downtrend is stalling and has begun to reverse higher. Hammer suggests that a down move is ending, hammering out a bottom. Note the long lower tail, which indicates the sellers made another attempt lower but were rebuffed and the price erased most or all of the losses on the day. The important interpretation is that this is the first time buyers have surfaced in strength in the current down move, which is suggestive of a change in directional sentiment. The pattern is confirmed by a bullish candle in the next day. So, hammer suggests that a down move is ending, hammering out a bottom, hammering out a bottom. Note the long lower tail, which indicates that sellers made an attempt to go lower, but rebuffed and the price erased most or all of the losses on the day. Note the long lower tail. The important interpretation is that this is the first time buyers have surfaced in strength in the current down move. The important information is that interpretation, not information, the important interpretation is that this is the first time buyers have surfaced in strength, is that this is the first time the buyers have surfaced in strength in the current down move, which is suggestive of a change in directional sentiment. Which is suggestive of a change in directional sentiment. The pattern is confirmed by a bullish candle the next day. Is this only talking about this graph, or I think it's only talking about these specific examples and not in general though, so So it doesn't always have to be confirmed by a bullish candle next day, right? Or is that like a standard textbook definition that is confirmed by a bullish candle next day? Let's see. So 3 separate hammers all signaling a bullish reversal. Hammer here, hammer here. So I think for the hammers, I don't think it matters what color they are. So let me just check. Can be red or green, and forms after the downtrend. Yeah, so it doesn't matter what color they are. So forms after a downtrend, downtrend here, boom, hammer here, downtrend here, boom, hammer here, downtrend here, boom, hammer here. All signaling a bullish reversal, so it goes up, goes up, goes up. Note that long tails at the bottom of each candle. That means the sellers try to push it lower, because remember this is the low price, the high is here, the low is here. But the buyers eventually won out, so yeah, be higher than whatever this bit here value is here, suggesting a shift in sentiment. Okay, hammer. Suggest that down move's ending. Hanging man. This is the opposite of a hammer, right? Yeah. Hanging man pattern suggests an important potential reversal lower and is a corollary to the bullish hammer formation. The story behind the candle is that for the first day in many days, selling interest has entered the market, leading to the long tail in the downside. The buyers fought back, and the end result is a small dark body at the top of the candle. Confirmation of a short signal comes with a dark candle on the following day. So confirmation comes with a red candle the next day. So I guess pattern is confirmed by a bullish candle the next day. Pattern is confirmed by a bullish candle next. It won't have to be a next day, because if you're not trading daily, then the next by a bullish candle next period, if that makes sense, the next period. So whatever the next candle is. Hanging man, so suggests an important potential reversal lower, and is a corollary to the bullish hammer formation. The story behind the candle is that for the first time in many days, selling interest enter the market. So for the first time in many periods, selling interest has entered the market, leading to the long tail to the downside, which leads to a long tail in the downside. The buyers fought back, and the end result is a small dark body, so small red body at the top of the candle. Does it have to be red? Hanging man, green instead of red. Hanging man is green instead of red. Hanging man, when the price is rising, hanging man, little note, the body, color of the body is not important, but black body is more bearish than the white body. Right, okay, so, okay. So, a red body is more ideal, basically. Selling tries to enter the market, leading to a long tail to the downside. Buyers fought back, and the end result was a small dark red in. Okay. Confirmation for short signal comes with a dark candle, red candle on the following. Confirmation of the pattern comes with a red candle on the following day. Abandoned baby top slash bottom. Okay, this is the new one. Abandoned baby top slash bottom. An abandoned baby, also called an island reversal, is a significant pattern suggesting a major reversal in the prior directional movement. An abandoned baby tops forms after an up move, while an abandoned baby bottom forms after a downtrend. So, also called an island reversal. An abandoned baby and abandoned baby is a significant pattern suggesting a major reversal in the prior directional movement. An abandoned baby top forms after an up move. Abandoned baby top forms after an up move, and an abandoned baby bottom forms after a down move. Abandoned. Oh, I spelled this wrong. I spelled abandoned. Okay, whoops. Abandoned forms after a down move. The pattern includes a gap in the direction of the current trend, leaving a candle with a small body, spinning top or doji, all alone at the top or bottom, just like an island. Confirmation comes on the next day's candle, where a gap lower, abandoned baby top, signals that the prior gap higher was erased and that selling interest has emerged as a dominant market force. Confirmation comes with a long dark candle on the next day. So, this pattern includes a gap in the direction of the current trend, leaving a candle with a small body all alone at the top or bottom. The pattern direction includes a gap in the direction of the current trend, leaving a candle with a small body, leaving a candle with a small body, so either a spinning top or a doji, all alone at the top or bottom, just like an island. Confirmation comes on the next day's candle, where a gap lower signals that the prior gap was erased. Where a gap was lower, baby top, abandoned baby top, after an up move. Abandoned baby top forms after an up move, but this looks like it's clearly a downtrend though, so how is that up? Or I guess the price could have come from this way, and then abandoned baby top suggests a reversal lower. Confirmation comes where a gap lower signals that the prior gap higher was erased and that selling interest has emerged as a dominant market force. Bearish. So where a gap lower suggests that the all at the top or bottom, just like an island. Confirmation comes on the next day's candle, so confirmation comes on the next day's candle, where a gap lower, abandoned baby top, signals that the prior gap higher was erased and that selling interest has emerged as the dominant market force. Abandoned baby top, so this is a doji or a spinning top, suggests reverse. There's a gap all alone at the top, so all alone at the top here, or at the bottom here, where a candle lower, where a gap lower, so gap and this is lower than this, signals that the prior gap higher was erased, so this bit here was erased and that selling interest has emerged as the dominant market force. Confirmation comes with a long dark candle next day, where a gap lower, abandoned baby top, abandoned baby top suggests a reversal lower. So abandoned baby top forms after an uptrend, right? Yeah. Signals that the prior gap higher was erased and that selling interest has emerged as the dominant market force. Confirmation comes with a long dark candle the next day. Confirmation comes with a long dark candle the next day. I just had a random thought to me. The Forex markets basically have a buy and have a sell group, and whoever is winning gets to either push the price higher or lower. So for example, if the buyers was winning, since there's more demand than supply, then the price is going to increase. However, if there's more sellers and the sellers are winning, then there's going to be more supply than demand, so the price is going to go lower. So I think as a trader, it's your job to not predict whether, well, I guess, yeah, you're going to have to predict whether there's going to be more people selling or buying that asset. So as long as you go over the majority, yeah, so the major market sentiment, then that would be how you profit. So if there's more people selling and then you short the trade, then you'll be able to make a profit. And there's more people, and if you think there's more people buying and you go long on the trade, then you profit. I don't know if that's obvious, but it just came up to me now. So anyways, take special note of long tails and small bodies. Candlesticks that have a small body, a doji for example, indicate that the buyers and sellers fought to a draw, leaving the close early nearly exactly at the open. Such a candlestick could also have a very small body, effectively forming a spinning top. Small bodies represent indecision in the marketplace over the current direction of the market. So small bodies represent indecision in the marketplace over the current direction of the market. This suggests that such small bodies are frequently reversal indicators, as a directional movement up or down may have run out of steam. Careful note of key indecision candles should be taken, because either the bulls or the bears will win out eventually. This is a time to sit back and watch the price behavior, remaining prepared to act once the market shows its hand. So wait for a confirmation basically, and then do your trade. Another key candlestick signal to watch out for are long tails, especially when they're combined with small bodies. Long tails represent an unsuccessful effort of buyers or sellers to push the price in their favor direction. Watch out for long tails. Small D's, and can be frequently seen as reversal indicators. As a directional movement up or down may run out of steam, so therefore either bulls or bears will win out eventually. So watch the price behavior and be prepared. Watch out to long tails, especially when combined with short bodies, as long tails represent an unsuccessful effort of buyers or sellers to push the price in their favored direction. To push the price in their favored direction. Only to fail and have the price returned to the near open. Only to fail and have the price pushed to the only have the price returned to near the open. Have the price returned to the near the open. Only to fail and have the price returned to near the open. Only to fail and have the price returned to near the open. Just such a pattern is the doji shown below, which signifies an attempt to move higher and lower, so this one here, only to finish out with no change. This comes after a move higher, suggesting that the next move will be lower. So after this move comes after an uptrend, suggesting the next move might be going to a downtrend. Long-legged doji signals a reversal lower. You can see a little, what's it called, a gap. Abandoned baby top or bottom. In this case, this is going to be abandoned baby bottom. Forms after a downtrend. Yep. So this is the overall downtrend, I think, over here. And then it's reversing into an uptrend. You can see another doji here. And yeah, in the next video we're going to go through which candlestick pattern is most reliable. See ya.